What's up, audit fans? Dr. Amanda White here, and today we're going to be looking at analytical procedures, specifically breaking down the different types. You've got analytical procedures, substantive analytical procedures, and then sometimes you might even hear the word data analytics thrown in with analytical procedures as well. So a big thank you to Rajat Agrawal that asked this question, and I thought, hey, let's make a video. So let's get into it. Welcome to Amanda Loves to Audit. For those people who are new, hi, my name is Amanda. I do love to audit and I teach auditing to undergrads at a major Australian university. Now, of course, I always start my videos with a shout out to all of my viewers from all around the world. And I love that you're leaving in the comments where you're from. And I have a huge list today. The Marshall Islands, Indonesia, Pakistan, Bangladesh, India, Eswatini, which I think is Old Swaziland, Guyana, Trinidad and Tobago, Brazil, Bahamas, Ethiopia, Mauritius, Zimbabwe, South Africa, Nepal, Nigeria, the Philippines, Zambia, Cameroon, Sri Lanka, New Zealand, Kenya, Cyprus, Malawi, Tanzania, the USA. I presume I've got a whole lot of Aussie and Canadian viewers out there as well. But if I didn't mention where you were from, a big hello and welcome to our little learning community here on YouTube about learning audit. So I'm going to jump into my tablet and do a bit of drawing and discussion about analytical procedures. So just hang on. So let's talk about analytical procedures. And, sometimes it can get a bit confusing. Now, if you are looking at analytical procedures and you're from an international or an IFRS environment, you're looking at International Standard on Auditing 520, and for those of us in Australia, ASA 520. So, that was a save there. When it comes to looking at analytical procedures, I always talk about how we do analytical procedures at different stages of the audit, right? We do them at the planning stage, and those are our ratio analysis. So often we're looking at ratio analysis here. We're doing the percentage change from year to year, so that horizontal type of analysis. And then also we're looking at the percentage of, for example, sales or assets, etc., which is going to be more of that vertical analysis. So at the planning stage, we do a lot of analytical procedures because remember, it's sort of like radar, okay? It's not going to tell us exactly what number is incorrect, but it's like looking at, a radar screen where it goes beep, beep, and that beep, beep tells us that there's something there. So at the planning stage, we're just using it to help us identify potential misstatements. All right. Now, they're not going to say, oh, look, here is one, but hey, here is somewhere where you should investigate. So it's sort of helping us find where, to investigate. And of course, you're going to combine this with all of your, inherent risk analysis. Okay, so that's at the planning stage. I'm living dangerously here with low iPad power. Now, once you get past sort of the planning stage, then you think about substantive analytical procedures. And it is still using trends and things to help identify potential misstatements. So again, it's still that radar, but it's more specific. So substantive analytics will typically be run on a specific account. All right. And again, it's helping you narrow down potentially where to look. All right, so substantive analytics can be used in a couple of different ways. That first one is to help you narrow down where to look. And if you think about a substantive analytical procedure, that could be something as simple as aging accounts receivable. Remember, when you age accounts receivable, you have 0 to 30 days, you have 31 to 60 days, 61 to 90 days, 90 plus days. And so that aging of accounts receivable is really there to help you identify that, hey, I want to look for provisions for doubtful debts. I'm going to focus on that specific area when I'm doing that aging. So we can use it to help narrow down where to look. The other way in which we can use a substantive analytical procedure is to gather evidence on a specific assertion. All right. Now, normally, we talk about tests of transactions and details, but in certain circumstances, we might actually use an analytic to gather evidence on a specific assertion, particularly where there might be low risk of a material misstatement. An account that might be smaller in value. So where you have a lower risk and you think that, oh, look, there's not likely to be many material misstatements, the account is smaller in value, you might do a set of analytical procedures that analyzes a whole lot of data to help you figure out whether valuation of depreciation looks okay. All right. And so those analytical procedures, again, could be like a full spreadsheet recalculation. Okay. Or it could be, and that's really more a substantive test, a meatier test, but it could be things more like, let me just come up with a good example here. Rough depreciation estimates. All right, so you might do a rough depreciation estimate. You know that this is the method, this is the useful life, here are the asset values, and you could do a rough estimate and then compare that to the client actual. And again, if this is a low risk account and it's smaller in value, you might say that that provides sufficient and appropriate audit evidence to say that the valuation assertion or the accuracy valuation assertion for depreciation is appropriate. Now, the one thing to remember here is that a substantive analytical procedure provides less assurance, okay, than testing details. So this is really, really important. If you have a high-risk account and it's a material account and you suspect that there are inherent factors, then you would not be using a substantive analytical procedure here. This is for those areas where, as I mentioned earlier, there's a low risk of misstatement that are smaller in value. Now, the one last thing that I wanted to bring up here in regards to, I guess, these analytical procedures is this data analytics? All right. And if you speak to my good friend, Professor Wendy Teets from Kent State University, she's like, accounting has always been analytics, and substantive analytical procedures are really data analytics. In audit, we don't have, data analytics doesn't represent something very specific in audit terminology. So when you look across the world and you talk about the use of data and tools for data in relation to analytical procedures and the audit, you'll see often the term ATT, all right? And that stands for automated tools and techniques. All right, so that's what they mean when they say, data analytics. When we use the term sort of more colloquially data analytics, you'll see in a lot of audit literature from professional bodies and the regulators all across the world, they'll use the term ATT, automated tools and techniques. Now, of course, that's a lot of stuff that we already know. So if you've used IDEA, if you've used ACL, Excel, just to name a few, you could be using SPSS, you could be using SAS, you could be using R now in more modern times, or Python. But of course, the ones that are a bit more, user-friendly are our IDEA, ACL, and Excel. Those are sort of more common audit tools. Those tools that we've been using for analytical procedures and substantive analytical procedures are actually ATTs, automated tools and techniques. I've mentioned doing analytical procedures at the planning stage. I've mentioned doing them as a substantive procedure, but I also wanted to just make sure that everybody knows that the third time in which you use analytical procedures is at the end of the audit. Now you might think, why am I doing them at the end? Well, remember early on where you did those percentage change analysis, or you did the ratio analysis. And what you did there was you were looking for unusual, I don't know if I can spell, unusual fluctuations. So when you're looking for unusual fluctuations, it could be things like a ratio is moving in the wrong direction, or it could be something as simple as sales increased by 25% and cost of goods sold only went up by 5%. All right. And that leads you to go, oh, hang on a second. What could be happening here? Did we increase the price? Did the cost of goods sold decrease? Did they negotiate a better deal with suppliers? So those unusual fluctuations get us to ask questions and zero in during the audit to see what exactly is going on here. Now, let's say that we get to the end of the audit and we find out at the end, okay, we found some duplicate sales. There was a problem with the control system and some sales got duplicated. Well, if sales is now increased by 15% and cost of goods sold is still up by 5%, but I talked to management, there's been no change in the price of the raw materials or the inventory that you buy, there's been no change in anything, and prices stayed the same, then if sales increase, cost of goods sold should increase by the same ratio. So here, again, we still have question marks. Things like, what is going on here? What is accounting for the extra 10% difference? So we actually use analytical procedures at the end of the audit as a bit of a safety net. All right, they help us catch any other potential undetected misstatements by looking at our analysis and saying, okay, now that we've found all the misstatements, we've made all of the adjustments in our version of the trial balance and the financial statements, do all of the unusual fluctuations that we found before, do they all go away? And if they don't, then that's the warning sign that says, hang on a second, there could be something left for you to go and investigate before you sign off on that audit report. So to the person that requested this video, I hope this clarifies analytical procedures at the planning stage as a substantive form of evidence, and then also at the end of the audit. Of course, always, I'd love to hear your feedback. If you have any further questions about analytical procedures, pop them in the comments. If you've got some great analytical procedures that you've used to help either substantively or at the planning stage, and I'd love for you to share them with our community by adding them in the comments as well. I hope everybody is staying safe, they are staying well, and I'll see you next time. Bye! Oh yeah, and always, I think I'm supposed to tell you, if you thought the video was useful, click the like button, I'd really appreciate it, and if you haven't already, press subscribe to get all my latest updates. Thanks very much for watching, and I'll see you next time.